Hey, welcome in. Listen, we're going to talk about how we predicted natural gas to double in 2024 from $2 to $4. A lot of people at the beginning of 2024 saw that we had so much production and we just didn't have enough demand, didn't have enough LNG takeaway. And in 2024, we saw the seeds of a change that was happening in the market, and that $4 was not only possible but probable. And a lot of people weren't expecting it, and it surprised a lot of people, but it did not surprise us. So we're going to walk through some of the key attributes as to why we didn't see that as a surprise. So in 2024, what actually happened? So in 2024, the puzzle pieces that we saw supply tightness forming as rig counts fell, and producers were falling behind on the supply side. So supply side was looking soft, like we were going to have less supply going forward. Meanwhile, we had the outlook and the projection for increased power demand, and that power demand was significant. So 1 BCF a day moves the market probably by 20 to 40 cents. So if we're talking 2 BCF, 3 BCF, we are talking about massive moves to the marketplace. And what we saw is supply was either going to be flat or dropping. Power was going to be up by 2 BCF, let's say. Then LNG, with the export expansions that were underway with Plaquemines, were expected to increase their capacity late into 2024 at the same time that we were going to enter the winter at reduced storage than we expected. So a lot of people expected 4 TCF. We did not get there. So those were the puzzle pieces that we saw. The first is we saw supply drop was going to be happening. Rig counts were on multi-year lows. We had maintenance pipeline constraints, and producers were holding back supply because at $2 they were failing to make significant revenue. So the key chart that we were looking at is when you look at natural gas on the supply side, there are two factors that change it. Every month, a natural gas well in the United States will decline, meaning when natural gas is produced from an underneath reservoir where a well is poked into it, every time you extract something out of it, the pressure gets lower. And as the pressure gets lower, it means the following month, we're going to have less supply naturally pressuring to the top. Or said a different way, if you have a balloon and you put a pinprick, it's going to get smaller and smaller and smaller. That is the same dynamic that natural gas has each individual month. So we look at declines, but we also look at new production. New production counteracts that balance. And what we were seeing in 2023 is that we were consistently adding 300 to 400 BCF a day each and every month. But what we saw in late 2023 is that number was plummeting. And the reason it was plummeting is because of rigs. So as we were seeing this switch, that was an indicator that supply was not going to increase. We were not going to see substantial increases in supply. There's a counteracting balance with some pressures and some things that are outside that scope, but those are nuances, and the basics on supply is when we see less new gas coming on that is less than the amount of natural decline, we are going to decline as a supply base. So demand was also, and power demand in particular, was set to surge. Now, AC driven power, AC driven power demand was increasing in 2024. Gas fired generation was leading as coal retirements were there. Weather models and load forecasters were consistently showing bullish forecasts. Add in the increased demand of AI, Now you have AI data center loads that are pulling even more electricity than they ever could before. And what we were looking at is an increase in power demand that was happening each and every year. And sure enough, in 2024, we topped that mark. So that is another component that we were watching in 2024 is we had flat to down supply, increased power demand, and LNG exports that were identified in the fourth quarter, third and fourth quarter, just as we're getting ready for winter. These are the key attributes. Most of the year, most of this period, we were struggling to stay above $2. But what we were looking at is not where we were, but the expansions that were happening. And as I said, 1 BCF moves the market, 2 BCF moves the market significantly. And you can see these levels 12, 13, and towards the end of the year, we got up to 15 BCF. In 2025, where it's 16 BCF. So the US became the top LNG exporter. Europe and Asia demand it soared under geopolitical risks. As you can see, the Russia-Ukraine war was bringing Europe in a lens of looking at LNG supply as their key attributes, bringing in their supply. So the result, we went from $2 natural gas to $4. That was 100% gain. Oh, and by the way, in 2022, we also predicted and projected to our membership that we were going to drop from $9 to $2. So we did expect more of a fight or more of a pause around $3 to $4, but we overextended to $2, which is part of the reason that we expected a return to $4 because we overcorrected and we saw supply would counteract that. So it's not just one direction, it's both directions. So what to watch for in 2025? Will production rebound? That is a key question. Rigs are dropping, but pressures at the wellhead are rising. What that means is more Haynesville wells, more Utica wells. These are high pressure wells. And as we look into the future, Haynesville and Utica become a big part of that decline equation. So we have our projection that for our membership in 2025 and what we're seeing on production. But the key is rigs are at the lowest level that we've seen since 2021. And for memory, 2021, we were still rebuilding from the COVID doldrums. So the other factor is, will LNG demand keep rising? Will we go from 15? Our total capacity that we're sending out is 16 BCF a day, but we could send out 17, 18. We haven't seen the total amount that we could export. Part of this is because of regasification capacities. Part of this is because US molecules in the LNG marketplace are some of the highest priced molecules out there. So these are key attributes that you watch when you're looking at LNG. For instance, part of the reason that $9 gas went down to $2 is Freeport LNG went down. That took 2 BCF, put it back into the US market. So it cuts both ways. As we expand from, say, 15 to 18 BCF a day, we might be able to see natural gas go to $5, $6 overnight. It might happen in a blink of an eye. The third, will power grid demand break new records? So there's a conflicting counterbalance here, and that counterbalance is that we have new demand in the marketplace of power, but solar and wind have been building out so much capacity that it's eating into power demand. This is part of the reason that we actually created Energy Rogue and part of the reason that we created Rogue Radar. We do have 2 links below. One, you will get your Energy Traders Toolkit. It is a free resource, so sign up today because it's a free resource that is going to tell you everything that you should watch in the marketplace, which comes down to supply and demand. But you've got to look beneath just what the supply number is and the demand numbers to actually project into the future. So your choices, you can stay blind to the markets, or you can spend 30 plus hours a week studying fundamentals and technicals. That's where I was before we created Energy Rogue and Rogue Radar. We wanted to create an affordable resource so that somebody doesn't have to spend, so that you don't have to spend 30 plus hours a week studying the marketplace on fundamentals, supply and demand, so that you have a key resource in your tool set. And let me take you a peek inside. So at the beginning of every week, you actually get a Monday game plan, which is a PDF, which tells you what is coming down the way. And that is for natural gas, for crude oil, and for heating oil. Plus, we can deliver a video where we talk about some of the technicals, some of the fundamentals, what is happening that particular week. And then later in the week, we have our key Rogue Radar report, which gives you a simple red light, green light report. You can see a lot of red here on natural gas. Well, it's no surprise to us that natural gas has been dropping lately. And then every single day, you get an update on our energy market analysis that goes through an executive summary, technical analysis, fundamental analysis. Let's take a look at that. On the fundamental analysis, we break down every component: dry production. Where was it last week? Where is it currently? Where was it last year? 3-year average. All of these help give you perspective. And then at the bottom, you can see the supply-demand balance, 13.6 versus a 3-year average of 13.3. So that means we're slightly oversupplied relative to the 3-year average on a supply-demand basis. And then, in addition, given that we have to watch LNG flows, we got to look at what is happening in the international markets, TTF prices, JKM prices, what the spread between the two, because not all the capacities are the same. So we track this every single day so that you don't have to. But the key factors to watch in 2025, production, global LNG, and power demand. These are the key attributes that you should watch for in 2025. I know Rogue Radar can help you, but if you want to get a little bit educated first before you sign up for anything that costs money, there is a free energy trader toolkit down below, but there's also Rogue Radar that is $89 a month that gives you a video every single week, plus 2 PDF reports, plus a daily breakdown of these markets every single day. So listen, my name is Brian. I hope to see you inside. I hope you'll come join us. It's $89 a month, and many institutional traders pay thousands every single month for this same information and the same insight. So we're bringing it to you at a cost-effective $89 a month. And again, I would love to see you inside, but that's all I got for today. So I hope you're doing well. Drop me a comment. Let me know what you see in 2025 and what you think will drive the market in 2025. So until next week, we'll talk then.